What is up, everybody, and welcome back to the channel. Today we are diving deep into one of the most powerful ways to view the market. We are going to be talking about the 4-hour chart and specifically how to profile 4-hour candles to know exactly when to enter a trade. If you have ever looked at a 4-hour candle and wondered if it is going to continue going up or if it is about to reverse, then this video is for you. We are going to combine the concepts of GXT profiling with the power of 3 to give you a complete framework for your trading. We have a lot to cover, so let us get right into it. The foundation, the 3 candle swing. The first thing we need to understand is that we do not look at candles in isolation. We look at them in a sequence of 3. This is what we call a swing formation, or simply candle 1, candle 2, and candle 3. Think of it like this. Candle 1 sets a reference point like a high or a low. Candle 2 is the testing candle. It tests that high or low. And candle 3 is the confirmation or expansion candle. The most common reversal type is what we call a candle 2 closure. This is simply where you wait for candle 2 to close. If candle 2 fails to close below candle 1's low, that signifies a reversal, and we can trade the next candle higher. Essentially, candle 2 acts as the manipulation, and candle 3 acts as the distribution. Now this is where it gets interesting and where most people get it wrong. It is not enough to just see a reversal. You have to look at the wick of candle 2. This is what we call profiling. There are 2 main scenarios you need to know. Scenario 1 is the large opposing run. Imagine candle 2 opens and drops hard, creating a massive wick before closing back up. Even though it closed green, that large long wick shows us that price traveled very far against our direction. That energy has been spent. A large wick does not support further expansion immediately. If you see a large wick on candle 2, you cannot trade it right away. You have to wait for candle 3 to open and reset. Scenario 2 is the shallow opposing run. This is the golden ticket. Candle 2 opens and only drops a tiny bit, creating a very small, stubby wick before reversing. Since the price did not waste energy traveling far, that small wick supports expansion. It tells us that the manipulation is done and we have plenty of fuel left to blast off. In this case, you can trade immediately within that same candle because it is both a reversal candle and an expansion candle. You might have heard of the power of 3 or AMD, which stands for accumulation, manipulation, and distribution. We are applying this directly to the 4-hour time frame. Every single candle has an open high, low, and close. When we are bullish, we are looking for the market to open, create a low, and then expand to a high and close. That move down to create the low is the manipulation. Our entire goal is to identify when that manipulation leg is finished, so we can catch the distribution leg, which is the real move. If we look at our candle sequence, again, candle 1 is the accumulation. Candle 2 is the manipulation. If candle 2 has that small, shallow wick we talked about, then the distribution happens inside candle 2 as well. But if candle 2 has a huge long wick, then the manipulation took too long, and we have to wait for candle 3 to be the distribution. Now let us talk about when to actually look for these setups. We are not staring at the charts all day. We have specific 4-hour windows we care about. For my Forex traders, you are focused on these 3 key times. 1 a.m., which represents the London session. 5 a.m., which is the New York reversal, or continuation. And 9 a.m., which is the late New York continuation. For my futures traders watching the indices, you are looking at 2 a.m., 6 a.m., and 10 a.m. These times are the opening times of the 4-hour candles that matter. The if-then logic. To make this systematic, we use a simple logic chain. It works like this. If the 2 a.m. candle manipulates and creates a low of the day, then the 6 a.m. candle should continue expanding. If the 6 a.m. candle manipulates, then the 10 a.m. candle should continue. You are always waiting for one 4-hour candle to do the dirty work of manipulating the lows and grabbing liquidity. Once that is done, and you see that small wick profile, you look to enter on the next candle to catch the easy expansion move. The biggest secret to high probability trades is aligning expansion candles. You want the daily candle to be expanding in your direction. You want the 4-hour candle to be expanding in your direction. And you want the 1-hour candle to be expanding in your direction. If the current 4-hour candle you are watching has a giant wick and looks ugly, do not trade it. It does not support expansion. Just wait for the next 4-hour candle to open. When the new candle opens, it resets the range and gives you a fresh opportunity to align with the momentum. So how do you actually push the button? You do not just buy blindly. You drop down to a lower time frame, like the 15-minute or the 5-minute chart. Let us say you are watching the 6 a.m. 4-hour candle on the Nasdaq. You want to see it open and drop slightly to form that small wick. On the 5-minute chart, this will look like a little consolidation that breaks lower and then immediately reclaims the level. This is called the protected swing, or a change in the state of delivery. Once you see that lower time frame confirmation, you know the 4-hour wick is likely finished. You can enter the trade and put your stop loss below that newly formed low. Now you are safe because you are trading the body of the 4-hour candle, which is where the speed and money is. So to wrap this up, guys, trading is about patience and profiling. You are not guessing. You are waiting for the 4-hour candle to tell you a story. Remember the checklist. 1. Wait for price to hit a key level. 2. Look at the wick size. Large wick means wait. Small wick means go. 3. Use the power of 3. Wait for the manipulation to finish. 4. Align your expansion candles. If you follow this framework, you will stop getting caught in the chop and start catching those clean, sustained runs. It is a filter that keeps you out of bad trades and helps you press hard on the good ones. I hope this video opened your eyes to a new way of looking at the charts. Go back and test this on your own. Look at the 2 a.m., 6 a.m., and 10 a.m. candles and see how they profile. You will be amazed at how consistent it is. Thanks for watching, and